All right. Good morning, everybody. Good morning and happy Tuesday. It's a short week this week. I hope you guys are well. I hope you had an awesome weekend today. September 5th. Oh my God, already. September 5th, 2023. Top story this morning is Country Garden. Buzzer beater interest payment on those dollar-denominated bonds. Country Garden has avoided default for the second time in like 5 days. So I guess it's all clear, right? The China housing collapse is canceled. Onward and upward to new highs. Everything is going well in China, right? No. What Country Garden just did was basically they made that minimum payment on their credit card. That's all they did. They made a coupon payment. They didn't pay back the bond. They didn't reduce their debt at all. They just bought themselves another few weeks of life. They have reset the clock. When you miss a bond payment on a bond, or when you miss a coupon payment on a bond, it starts a 30-day clock. It's the grace period. And we saw this pattern with Evergrande in 2021. They would routinely miss their bond payments. They would enter that 30-day grace period, and then they would make the payment, buzzer beater payment right at the last minute, reset that 30-day clock, buy themselves another month. Right up until they didn't. And then so began the collapse of China Evergrande. And all the while Evergrande was collapsing, everybody said, whew, it's a good thing Country Garden isn't in terrible shape like Evergrande is. Yeah, how's that going for you? So Country Garden has managed a stay of execution and nothing else. And of course, that spurred a relief rally in China. I guess it's a relief, or, it's not the worst thing that could have happened. So then enjoy this brief respite. Elsewhere here in the States, for the second time this year, Reverse Repo has caught me off guard. And I got to own up to this one, guys. This is twice now this year where I have just been clubbed in the back of the head by Reverse Repo. Now, the first time was right after the debt ceiling was raised. After the debt ceiling was raised, right before the debt ceiling was raised, I put out a video, and I remember I had a lot of people were laughing because I started the video, I said, Janet Yellen sucks. And, that was a joke saying as soon as the debt ceiling was raised, Janet Yellen was going to borrow hundreds of billions of dollars and suck liquidity right out of the bond market, and I apologize for the visuals with all my heart. Well, that did happen. Janet Yellen did borrow hundreds of billions of dollars within days of the debt ceiling being raised, but what I did not factor in was that the money would come from the reverse repo. And if you don't know, reverse repo is this giant stash of cash in the banking system that it's a lot of the money. It was over $2.5 trillion of the money that was printed during the pandemic. And that money never really made its way into the financial system. It never started chasing assets. Really, it just was put into reverse repo at the Federal Reserve where they could get a free 5% interest on it. That money might as well have been on Mars. Well, shortly after the debt ceiling was raised, money started flowing out of reverse repo and into short-term treasury bills. And that's why we didn't get that giant liquidity suck from Janet Yellen and her borrowing bender right after the debt ceiling fiasco was over, because reverse repo cash flowed into the bond market to offset that new bond supply that was coming into play. So I didn't see reverse repo coming earlier in the year, and that's on me. I didn't catch that one. And then a few weeks ago on one of my Patreon Zoom calls, we were talking and I was saying, hey guys, there's a lot of long-term treasury issuance that's coming now. Instead of 1-month T-bills, 6-month T-bills, now we've got 10-year notes, 10-year bonds, right? 2 years, 30 years, the longer-term stuff. And I said this longer-term stuff could be a problem. We might see rates rise pretty substantially because I didn't think reverse repo cash would do the same thing for the long-duration treasury bonds like it did for the short-duration stuff, because reverse repo is an overnight operation. You get the money back the next day. And I didn't think, okay, if you get the money back the next day, maybe you'll buy a 1-month bond because you get the money back next month. It's pretty close in the grand scheme of things, and you get the extra 40 basis points that the 1-month treasury was yielding. But I said, no way that reverse repo cash is going to leave and go chase 4% or 4.2% in a 10-year treasury. Well, that's exactly what it did. Over the last couple of days, there has been a massive, about $225 billion has drained from the reverse repo, from just over 1.8 trillion to just under 1.6. That is a huge amount of money flowed from the reverse repo market to the long end of the yield curve in a very short period of time. And that is the second time this year that I have just been totally blindsided, clubbed in the back of the head by the reverse repo. There will not be a third reverse repo. I'm watching you now. And with that, let's shrink my big melon of a head and let's see what's going on in markets this morning, shall we? And first thing I have to say, guys, this is the second time I've done this in a few days. When this stream is over, I need you to go back to my channel and watch this video. I worked all weekend on this video. This is part 3 of my series on CoreWeave. And we'll talk a little bit more in the coming days about what went into this video. This was a very messy story, a very boring story with a lot of complex parts. And I just didn't know how I was going to tell this story. And there is a very big lesson in this story. You have to stick around to the end, to at least the 12 or 13 minute mark is where the big story in. The people who are propping up this market, all right, because this CoreWeave company is a conduit through which money is flowing into NVIDIA. And by extension, NVIDIA is propping up the entirety of the stock market. And the people at this company, CoreWeave, I didn't find any fire, but I found a whole lot of smoke. A whole lot of smoke. And if you haven't seen part 1, where I interviewed Samantha LeDuc, and part 2, where I got into how Magnetar Capital is just pumping money into these guys, and in part 3, I get into the sketchy, and I do mean sketchy past of these people. Guys, you got to go watch that whole interview series. There is a lot riding on this. And look, this is not a market crash tomorrow thing. This is not a gotcha, in handcuffs tomorrow morning. All I found was a whole lot of smoke. And I do mean a whole lot of smoke. Still no fire. All you people out there whose job it is to find the fire, I just showed you the smoke. What are you waiting for? And you're going to see in this video that the regulators are playing a role in this as well. So go and check that one out. I put a link down in the description below. And if you guys are following on Twitter right now, it's also pinned to the top of my Twitter feed. Now, with that, let's move on here because we got to talk about what's going on in markets today. We've got fear. Is gone. Where did all the fear go? It's not around here. Nope. Greed has returned to the market. 56 on the fear greed index after a brief stint in neutrality. It looks like the greed is starting to accumulate again. Although the S&P right now down just 3 points pre-market at the moment. We were down a lot more, and I guess Federal Reserve Governor Waller was giving a speech. Waller must have said something a few minutes ago because it looks like we got a little bit of a green candle in the futures in the S&P, but that is now slowly abating. We've got the Dow is just barely in positive territory, up 30 points pre-market this morning, or 0.09%. The NASDAQ still in negative territory, down about 0.3%, or minus 45 points pre-market. The U.S. dollar, however, was up sharply this morning. It was up over 60 basis points. Again, Fed Waller must have said something. I don't know what Mr. Waller, the Walrus, whoever, what did they say that dropped the Dixie some 30 basis points in a couple of minutes? It must have been some kind of pivot talk. Look, the September rate hike, it's not happening. Nobody really thought it was happening. So, if they say something like, oh, we now have flexibility to wait a month, we already knew that. So I think this is just traders mincing words. Currently 104.59 for the DXY. Looking over at commodities, we got gold is not liking these higher rates and stronger dollar this morning. Gold is down about $10 on December futures, trading at 19.57, down 0.5%. December silver futures trading at 24.06. That's down about 50 cents or 2% this morning. Silver is definitely not liking this market action today. October oil futures for West Texas Intermediate at $87, up $1.51 this morning. Are we going to see $90 oil again? Yikes, oil is looking to break out. Keep an eye on that one. And then in the bond market this morning, we got higher yields pretty much across the board. The 30-year Treasury yielding 4.35. That's up 6 basis points. The 10-year, 4.23%, up another also 6 basis points. 2 years up 3 bips at 4.895. And the 1 month still pegged where it is, 5.39% for the 1 month Treasury. And here is, nope, not this one. I should have closed this one. Here we go. Country Garden pays dollar bond interest within grace period. And a great sigh of relief was breathed all across China. The grace period was set to expire at the end of September 5th and 6th on a $22.5 million payment. China's property debt crisis has engulfed more developers. Chinese developer Country Garden Holdings has paid coupons on $2 bonds. That's important that these are dollar-denominated bonds within the grace periods, avoiding its first default and bringing some respite amid a liquidity crisis that has shaken the nation's financial markets. Among the most indebted property firms in the world, Country Garden told some holders of the notes about the payment. The creditor said, asking not to be identified, discussing a private matter. The builder, helmed by one of China's richest women, Yang Huiyan, I apologize for the pronunciation, had to pay a combined $22.5 million in interest on the two bonds within the grace period after failing the payment initially on August 7th. Now, the payments by Country Garden time it as it tries to sort through 1.36 trillion yuan or $187 billion of liabilities. But the debt crisis facing the company and the wider property sector is far from over. Country Garden bonds still trade at deeply distressed levels, around 9 to 14 cents on the dollar. This is garbage debt, suggesting investors anticipate an eventual restructuring or liquidation rather than a state rescue. So, look, guys, this is not the end of the story for Country Garden. All they did here, they just bought themselves time. That's all they accomplished. They're not out of the woods. They didn't even pay down their debt at all. This was just a coupon payment, just an interest payment. So the debt pile has not gotten any smaller. Country Garden's earnings are way down. They're no longer able to pre-sell apartments, which was how they've been able to finance payments on their old debt, which, yes, as a matter of fact, that is very Ponzi-like. Thank you for pointing that out. So we will be hearing more from Country Garden. Now, let's talk about this one, guys. Overnight reverse repurchase agreements, or the reverse repo. This is what we were talking about in the introduction. This is going back to about 2021. Here's all the money printing in the world. Here's all the stimmies and the helicopter money. And the banking system was like, what do we do with all this cash? And the Fed said, just loan it right back to us. And the banks were like, but you just print this, loan it right back to us at 5%. Trust me, it makes sense. Okay, that's what they did. And we got up to as high as $2.5 trillion in that reverse repo, overnight reverse repurchase agreements, and then it started to come down. Now, right here, the end of May, beginning of June, you can see reverse repo started to fall. That was when Janet Yellen started issuing all that short-term treasuries after the debt ceiling crisis, and we saw reverse repo came down pretty far. Now, let's zoom in a little bit more because something interesting happened the last couple of days. Look at here, guys. Starting on August 23rd, mark that date, August 23rd, reverse repo cash started dropping substantially. What happened around August 22nd to 24th that all of a sudden all this money started flowing out of reverse repos? And where did that money go? And then again, late last week, we saw the same thing. We saw a big drop in reverse repos. We've gone in just a couple of days here, little over 1 week, we went from 1.816 trillion to 1.574 trillion. Huge drop in reverse repos, over $200 billion. Well, I think I know where some of it went, guys. Check out the U.S. 10-year Treasury. And I want to zoom in a little bit here because right here, the very peak of this chart, August 22nd, is when the 10-year Treasury hit its top, 4.36%. So right as interest rates hit their peak, money started flowing out of the reverse repo and bond yields started dropping in the 10-year Treasury. Remember, bond yields are the inverse of bond prices. So that means money was leaving reverse repo and buying long-term U.S. Treasuries, driving those interest rates lower. So that's something I didn't think would happen. As a matter of fact, I'm pretty sure I specifically said on this channel several times that reverse repo cash would not do that. I got that one wrong, guys, because there it is happening in real time. Right as the 10-year Treasury hits its peak, overnight reverse repo drops by a few $100 billion. And that has continued all through this week. So that's interesting. I was not expecting that. And that just means that reserve of liquidity, that now $1.5 trillion, that a few months ago was $2.5 trillion. The spare liquidity in the banking system is being soaked up by all this bond issuance from the government. And when that runs out, just make sure you have a helmet on when that happens. All right, let's talk about some good news, though. The Logistics Managers Index just came out. Now, this is a pretty new indicator, but this measures the health of things. It's kind of like a manufacturer's PMI, but for warehousing and trucking. And this has been making some noise lately because in the middle of the year, from January through the summer, the LMI, the Logistics Managers Index, was just dropping. Anything below 50 means logistics is in contraction. Anything above 50 means expansion. And we had 3 consecutive months of all-time lows in the LMI index. Now, this index is only about 5 years old, but still an all-time low. And then this morning, we got the newest one, and we actually took a pretty big jump up in the LMI, 51.2. Now, that's after making historic lows of 45.1. So logistics is back into expansion territory, albeit just barely. Want to give you a couple of the key points here. Warehousing utilization grew strongly to 57.8. Inventory levels contracted, but at a much slower rate, 47.9 versus 41.9. So inventory's still shrinking, but it's shrinking slower. So either people are buying more stuff or less stuff is getting made. Either way, inventory's shrinking. There was a rise in inventory costs. Warehousing prices are rising. Transportation utilization rebounded to neutral from 41.8, which is deeply negative. The rate of transportation price contraction slowed. So prices to move things are still going down, but it's going down slower. So they're saying here it's not yet clear if this is a move back towards expansion or if this is just a one-off or a dead cat bounce in logistics. But this is important to mention, guys, because we don't just talk about the bad news here. When things are going well, we got to cover that too. And there may actually be something here because remember the Johnson Red Book Index, I've also covered this, for the last 3 or 4 weeks, this has been rising. Now, the Johnson Red Book Index, this measures same-store sales growth, and it's a weekly snapshot versus a year ago. So in the middle of July, we had 3 negative numbers. Now, these are not adjusted for inflation. So when you see a negative nominal number, when you also have 3% inflation, that means real sales were down substantially. But the Johnson Red Book Index has been recovering just as this monthly LMI snapshot goes up. So there might be a there, guys. The economy, at least the consumer economy, may be picking up a little bit. Now, I've heard a lot of things about maybe back to school was stronger this year than a year ago. That could be driving it. I hate the phrase, but Barbenheimer, a lot of people went to the movies in July. Supposedly the Taylor Swift tour drove a lot of travel and a lot of consumption that way. So maybe all those stories combined have juiced the economy just a little bit. But it's something to keep an eye on. It looks like there are at least some early signs of a recovery and expansion in retail. So we're going to keep an eye on that. But the elephant in the room, guys, next month, student loan payments come back. And shout out to the Kobayashi letter on Twitter who posted this chart this morning. This is showing delinquencies in the United States from 2006 to 2023. Now, they're showing consumer loans, credit cards, and auto loans. Now, here, big jump in delinquencies during the GFC, right? No big surprises there. Now, what's the takeaway from this chart? 2 things. Number 1, delinquencies are not at alarming levels. All right, if you look where they are here, they're not really that high. They're higher than they were through most of the 2010s, but still they're only to about levels last seen in 2012. So right now, delinquencies on credit cards and auto loans and consumer loans are not this all hands on deck emergency problem that's going to crash stocks 5 minutes from now. That's not what we have here. But remember that big but. However, look, guys, this thing is rising fast. And it is not showing any signs that that rise is slowing. So the time to worry is before the delinquencies reach all-time highs, all right? If you wait until the delinquencies are up here, then it's already too late. So it warrants keeping an eye on, guys. Consumer debt, autos, consumers, credit cards, it's on the rise. It's on the rise fast. It has not yet risen to levels you need to worry about, but you better pay attention to this one. Again, shout out to the Kobayashi letter on Twitter for posting this one. And last but not least, guys, I just want to mention the Silver Symposium, 24 days from now, Las Vegas at Caesars Palace. I will be there along with all your favorite YouTubers. If you use that link down below, you will get a 10% discount on your tickets. That's an affiliate link. So come on out to Vegas. Let's have a beer. Let's talk all matters finance. And hopefully I will see you at lovely Caesars Palace. And listen, guys, I have a special thank you I have to say this morning. My wife, Gigi, God bless her. I love you, Gigi. Thank you for everything you did this weekend. I buried myself in that CoreWeave story really since late last week, and she has handled everything. She has kept the outside world at bay so I could sequester in my office and work on this CoreWeave story, and it was a marathon. All this through this long weekend, I was in here doing long hours working on this stuff. And our anniversary was this weekend, and I spent the whole thing working, and she did not complain one little bit about it. Gigi, you're a trooper. Thank you so much for all the support you give to the channel. I know you have this stream playing right now, but it's probably on mute because you have work to do yourself. So thank you so much. I'm sure she'll go back and watch it eventually. That's about all I got for you guys this morning. I just want to say thank you again to Gigi. Thank you to everybody for your wonderful comments on the Core Weave videos. Thank you to my Patreon supporters for everything you guys do for the channel. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.